It's time for the big three. We've got 3 stocks and 3 charts to take you through. Rick Ducat, of course, joining us to take us through the charts. And here to take us through the trades is Tim Bohen, the Chief Technical Trainer at StocksToTrade.com. Tim, great to have you with us. Rick, great to have you here as always. And Tim, can we just start with a big picture thought on market performance this week? You know, another choppy morning we're dealing with.
Yeah, well, number one, thanks for having me back, Marley. I missed you last week. Listen, very volatile market this week. A lot of reactions to the news. I mean, you go back to last Friday. You know, I was here with Rick. That big pullback on the Trump tweet. But at the end of the day, you know, a lot of the charts I bring you guys are very, very bullish charts. What I like is these 3 stocks today are actually kind of pulling back to some support levels. And I think it's creating, all this volatility is creating buying opportunities in a lot of these hot sectors.
So let's talk about this first potential buying opportunity. It's a name we've been talking about because a lot of headlines. AMD, you know, just the last month up 45%. But like you said, pulling back a little bit today.
Yeah, so obviously, you guys know a major artificial intelligence bull. I've called it the greatest technology since the wheel, fire, the internal combustion engine, et cetera. But, at the end of the day, it's kind of that picks and shovels idea. You can't build these data centers. You can't expand the capabilities. You can't grow that business without chips. And, AMD's another company just like NVIDIA. Back when I was at my computer company in the 90s, loved their technology, loved the CEO at AMD, and I just think if we can get a continued consolidation zone here, people are going to look back at this as an amazing buy opportunity, even if that stock is up a lot in the last week or so.
All right, Rick, so as we take a look at AMD and its performance, not just in the past week, but you can certainly see off of our April lows here. What are the technicals showing us?
Right, and as we often say, just because something is high doesn't mean it can't keep going higher, and who knows when that could stop. And when we look at our recent price activity, large gap to the upside here that took out our old highs pretty significantly. We topped out previously around 186, so that's been left in the dust here. Our low point after our gap comes in right around 203, so that's the first boundary to keep an eye on to the downside here. So the short-term shape that we have here is kind of a more of an ascending triangle where we have a resistance ceiling near about 240, and then we have a rather steep, in this case, trend line going across the lows. So increasingly anxious buyers and consistent sellers. What the hope would be if you were bullish in this name and looking to trade this pattern is that eventually the bulls would push up above that resistance level and trigger the cascade of orders that results in the breakout and the push above that level that can create the runaway price activity here. But if we were to look at our moving averages here, yellow 21-day exponential moving average lines up fairly closely with our lows near 203. The moving average comes in at about 201. We did see a little bit of bearish divergence on the RSI. We saw that RSI made 2 new peaks, but price was making 2 new peaks, but RSI was actually trending lower. Now we have fallen out of that overbought area once again here, but just very slightly. We're still very high in terms of the bullishness of momentum here. So, 241, 240, that's the obvious point to the upside that the bulls would want to break out. If we do start to move beyond that point, the +3 standard deviation channel comes in right around 253. Our volume node area, not really too much to work with here given how little time we've spent in this range here. But our +2 channel lines up with this volume node near about 222, and then to the downside even further, 203, as we mentioned, would be the final point to watch before we could fill that gap.
And right now trading at 229.61 here on AMD. Now, Tim, let's move to your next pick here, Nuscale Power. Really impressive performance year to date, up about 145%. But in that same time period, they've had 2 massive downside moves of about 40%. So why are we bullish on this one?
Well, kind of going back to, everything's AI at the end of the day. It kind of reminds me when Trump sat with Elon and the Teslas and everything's computer. Well, everything's AI. And I'm a huge believer in these small reactors. And I think that was proven this week when the Army mentioned their Janus program looking to, power basically, I think their goal is all of these military bases with these small reactors. I think it's a great way to spot demand around data centers as well as areas with bad infrastructure. We know the electrical infrastructure across the country is a disaster. The closer you can move power generation to the edge. And, I just love the chart and love this company in that sector.
All right, Rick, so as we take a look at Nuscale, and their chart, you can see, some of the wild moves that we've seen in terms of their price action. What are the technicals telling us?
Yes, nuclear seeming increasingly like the area to watch in the energy sector here. And you could have said perhaps that we had an upward sloping trend line across the lows coupled with this downward sloping trend line going across the highs, giving you this more triangular pattern in the shorter term. But we have pushed out beyond that to the upside here. We took out those old highs. However, if you look at where we closed, that was right about the point of those old intraday highs near 53.50 or so. So even though the intraday highs were significantly beyond that, the closing prices are almost always regarded as being more important there. So that's where we settled down for the day. That is the double top resistance area that really is more relevant to a potential breakout. So now we have fallen back to earth a little bit here. 47, our green line. That was where you might have expected to start looking for some support. That was an old resistance level. We have broken through that. Now we are close to retesting our old trend line here. So these old trend lines, they can come back into focus here down the road. So it can be worth leaving them on your chart just to see if they can become, as the horizontal levels are, old resistance becomes new support and vice versa. So our moving average, the closest one here, yellow 21-day exponential moving average. That comes in right around 42, so that could be a shorter term area to watch. Our orange 63-day EMA lines up with our old upward sloping trend line near about 39 as well. RSI still bullish, but has given up a lot of its strength here, crossing back out of the overbought area, still hanging on to its bullish trend line and above the 50 midline as well. So look for a crossover there to signify potential weakness to come. Finally, when we look at our volume profile study, most of the trading activity is down here between about 36 to 40 or so. That was the really heavy trading range to watch here. Our +1 standard deviation channel comes in around 51.40. So that's another potential stopping point on the road back to those old highs near 53.50, as we said.
All right, Rick, so let's go back to Tim now and talk about this last pick, the metals company. I wasn't as familiar with this deep sea mining company, but when I was taking a look at their chart, a very interesting start to the month they've been having, a meteoric rise. Then Wednesday they had more of a 10% drop here. What's your pick here?
Well, so this is the most speculative of the bunch, obviously. As you said, very volatile stock. But, as you're watching the news flow with the saber rattling or whatever you want to call it with China, I'm a big believer that there should be rare earth metals refining, exploration in the U.S. And really the catalyst for this idea, I'd been watching the chart for a while, but on the flight in, listen to the Sean Ryan podcast with Gerard Barron. I always want to say Gerard Butler, but he's one of the founders of the company. Very great thinker, was really inspired by a lot in that podcast. And as he broke down the availability of these rare earths in the ocean, you basically just go down and pick them up. I think that as that story continues to spread, especially one thing he talked about was how pro the administration is to his business. Basically, he's like, this is finally what we've been waiting for. So this dip back to that previous breakout level, I think, is an amazing potential opportunity here. And last point I do want to make, I know I do this almost every week, but love Rick's breakdowns. One of these weeks I'm going to disagree with the guy, but both of those on the chart analysis agree across the board.
All right, we've got one more technical to walk through, though, Tim. I think you'll probably be in agreement, but we'll see. I'll check back in at the end. But Rick, walk us through the technicals on this one. In the last 12 months, up more than 700%. So certainly seeing that boost in terms of the markets thinking that regulation is going to favor a company like this. Yeah,
maybe not the most exciting name for a company, but the chart more than makes up for it here. You can see that we had these high points here near the $8 level. We faded from that that area. Then we stabilized kind of around this old consolidation area near 5. Now we had a kind of a small cup and handle type pattern, what was what it looked like it was shaping up to be, where we had this gradual bottoming out and then the re-entry back into that resistance area. What you would typically be looking for with that would be a brief pullback and then the push to the upside. Didn't even happen. We just blazed through those old highs here. So you know, these setups, they don't always work out the way you're hoping they might here. So just something to keep in mind. It's certainly not a crystal ball that's going to shape out that way. So in this case, we had our big breakout to the upside. 1135 is where we topped out. Now we have found ourselves back at that $8 level here, our red line here. That is roughly the spot of those old highs. So this seems like an important area to watch going forward for the bulls to hold on to. When we look here, we can see that we are also near our yellow 21-day exponential moving average. That lines up with that $8 level. Once we start moving a little bit lower, you can see we have here our 63-day EMA lining up with old highs and lows here, and one of our volume nodes that you'll see in a second here, our shaded area, 670. So a little bit of bearish divergence here. Once again, we have crossed out of that overbought area. We're still above the 50 midline. Kind of a similar story with all these stocks here, as Tim said in the beginning, kind of seeing pullbacks after extensive rallies here. So now when we do have our volume profile study here, you can see that the volume really starts to thin out above that $8 level here. So we're kind of in that point right now where we would be re-entering the heavy trading areas here. So if we were to hold on and rally once again, the gap would be filled at 853, and then the +1 standard deviation channel comes in near 984 to the downside. Right around 730 is our heavy volume node, relatively speaking, and our linear regression line, our line of best fit.
All right, so right now, metals company trading down about 7% at 807. But I do want to check back in with Tim one more time, see if he's still on the Rick Ducat train in terms of his technical thoughts, and also any final thoughts you have.
I am. I tried throwing a curveball with that one. But yeah, I mean, I knew it was a very speculative stock, like you mentioned, up 700%, I think you said. I mean, but again, I still agree. I love the way he breaks down the charts. Very similar style the way I do it as well. So.
Well, that's why he's our lead market technician. Thank you both for being with us. Tim Bohen, of course, chief technical trainer at StocksToTrade.com, and Rick, our best of the best lead market technician. Thanks again for being here.